think over the next 3 or 5 years, the overwhelming challenge for the financial markets generally is just to regain the confidence of investors, because we've lived through a shocking period of seemingly arbitrary volatility, and many of the things that we encourage people almost to take for granted, such as the idea of being paid for taking risk in capital markets, many of the things that we took for granted almost have had to be rethought. So I think we're all going to have to readdress exactly how we do financial analysis and how we offer it to the public. I think it is. I think it's very important. We think it's very important, certainly, to try to insulate people from a lot of the short-term noise that can dominate the media debate and the market debate. And there's more of that noise now than there ever was. And to that extent, we certainly feel that we can help people navigate their way through that. Well, for the global economy and capital markets, by a mile, I think the biggest challenge over the next few years is going to be the normalization of interest rates. It's not healthy for interest rates to stay at negligible levels for too long, because it encourages the misallocation of capital, it encourages bubbles in some markets, and I think the world will actually be a healthier place economically, although people with mortgages won't thank me for saying this, but it will be a healthier place economically when interest rates actually start to rebound to more normal levels. Then the second big issue, I would say, turning to the industry, would be something that we've touched on already. How do we rebuild the trust that our clients ought to have in financial markets? I think very, very slowly. I think if we try to be candid about what we can say, and if we're unable to make detailed forecasts with any confidence, we say so. And I think we, as an industry, we should do more of that. When we simply are unable to make convincing forecasts, we should recognize that the future is just sometimes profoundly unknowable. And what investment management often is about is simply trying to position portfolios to make sure that there is appropriate insurance in balanced portfolios to guard against most unexpected outcomes, as it were. Very difficult, because I would have said it will be smaller, but I've said that after each of the setbacks that the financial sector has seen in the last 20 years, and it hasn't shrunk noticeably. But I'll stick my neck out, and I think it probably will be smaller. There will be fewer big players. I think the products will be simpler, and I think they'll be cheaper.